Folks, in today's video, we are going to break down the top 5 stocks to buy heavy before June 2026. Stock number 5 is at the center of Trump's USA-China recent talks. Stock number 4 just got massive orders from Meta, OpenAI, Anthropic, and Microsoft amongst some others. Stock number 3 is one of the craziest setups right now in its space with some beautiful momentum. Number 2 is down at dirt cheap prices while following a new aggressive and previously proven strategy that has worked for a lot of other companies, including companies that we have talked about that have done very, very well. Number 1 is a very quiet but massive beneficiary of both the new powering trend in data centers and also the SpaceX IPO that is coming in June. That is going to be quite the doozy. I will present the case for each of these some key risks, and as always, let you be the judge. And then lastly, it is going to be time for our sponsored segment on Quantum Biopharma. Ticker symbol QNM on the NASDAQ. They are a clinical stage biotech with a first-in-class multiple sclerosis drug called Lucid MS that just announced its in-filing with the FDA on April 1st of this year. I will present the company and why you may want to take a look at it. And as always, if you are the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Okay, we got to start with number 5, USA Rare Earths, USA. Now, this is very, very central to the talks that just happened in China between Trump and Xi Jinping. Xi does not want you to know about this one-trick stock. So what do? Well, USR is trying to break America's dependence on China for a set of materials called rare earth elements. These are metals that are used to make powerful magnets inside basically every modern military and tech product. F-35 fighter jets, missile guidance systems, electric vehicle motors, wind turbines, satellites, MRI machines, all of them need these specific rare earth metals. Here's the problem. As you probably have already heard, China controls about 70% of the world's rare earth mining and about 90% of the processing. So even if America wanted to make its own missiles and EVs without Chinese parts, we currently cannot. USA owns a deposit in West Texas called Round Top, and it is basically a giant pile of these rare earth metals sitting in American soil. They are also building a factory in Oklahoma where there ain't no love, but in Oklahoma to turn those metals into finished magnets so they do not have to ship anything to China to be processed. Now, why do I think this is worth a lot more than the market is thinking it is? You see, China has been gradually cutting off rare earth exports for the past year. Every time they tighten the screws, the stocks in this group jump, and considering that Trump just came back from this US-China summit, well, right now is the time where they are going to be thinking and talking about new contracts. You see, again, you have to understand the US military literally cannot build the weapons it needs without Chinese rare earths. The Pentagon, Congress, and the White House have all said this is a national security crisis. The Trump administration has been signing executive orders, handing out government funding, and even buying stakes in mining companies, as you know. And this company has already been heavily backed by the US government. Here are 4 ways that the government is in on USR. Number 1, the government owns 10% of the stock through 16.1 million shares plus 17.6 million warrants. Number 2, $277 million in cash grants via the CHIPS Act. 3, $1.3 billion senior secured loan, also via the CHIPS Act. Then 4, you have the DOE partnership working with national labs on rare earth separation tech at USR's Colorado and Texas sites. The total package here is $1.6 billion plus equity stake, part of a bigger $18.6 billion critical minerals push under Trump. So the bottom line here is that Uncle Sam is a shareholder, a lender, and an R&D partner all at once. Any kind of tension between the US and China can move the stock a lot. So anyways, when you are looking at this company, you have to understand the overall tailwinds of the government wanting more and more rare earth production. And then you have to understand the narrative tailwinds, which is really where all the money is made. Markets move based on narratives first, fundamentals long-term. If you go back to October 22nd, well, Mustache Charlie broke down the structural case for us, and specifically how USAR could potentially address some 93% of the neomagnet market, a market that is so incredibly important and central to the current rare earth tensions. Ironically, that video has made it a horrible time. Markets reached a top 2 weeks later and then did not bottom until the end of March. Never trust Mustache Charlie. Whenever the mustache grows out, that is a signal of the top, so things that could move the stock in the next 6 to 8 weeks. Well, China tightening rare earth exports even more. Pentagon or Department of Energy announcing funding for us. A defense company like Lockheed Martin or RTX signing a supply deal, a Trump executive order on critical minerals, and really, quite frankly, any US-China trade headline. Now, in terms of the risk, unfortunately, they are probably going to need to raise more money by selling shares at some point, which can drag the stock down. And mining projects always take a lot longer than companies say they will. So when it comes down to this stock, a lot of it is going to be driven by narratives of the current market condition and then the long-term backing by the US government of the entire sector in one way, shape, or form. Number 4, CoreWeave CRWV. This is still down quite a lot from its highs, and I believe that June is setting up to be a great month for it. Now, what are they exactly, Charlie Chirito, who is just looking for a rally-do? Well, they are a leader in the neocloud space. A neocloud is a new type of cloud company built specifically for AI. The old clouds, AWS, Microsoft, Azure, Google Cloud, were built to run regular business software like email, websites, and databases. They are general purpose. A neocloud is very, very different. It is a cloud company built from scratch with one job, and that is running AI. Now, neoclouds buy thousands of NVIDIA chips, stack them in giant warehouses, and rent that computing power out by the hour to companies like OpenAI, Anthropic, and Meta. AI companies then use that rented power to train and run their own models, the same way you would rent, say, a U-Haul instead of buying a moving truck. Now look, we have been talking about CoreWeave for years. It has been one of the main data center plays. However, you have to understand that the customer pipeline and the customer flow is insane right now. Meta has committed $35 billion to CoreWeave through 2032. Jane Street, one of the smartest trading firms on Wall Street, just signed a $6 billion deal and put $1 billion of their own money into buy shares. NVIDIA itself invested $2 billion in CoreWeave and promised to buy any unused capacity through 2032. That is huge. The chipmaker is basically guaranteeing CoreWeave's business. Anthropic, the company that makes Claude AI, signed a multi-year deal. OpenAI, the company that makes ChatGPT, of course, is a major customer. CoreWeave has more than $66 billion in deals already signed and waiting to flow in as revenue over the coming years. Now, why is this relevant right now and into June 2026? Well, you see, NVIDIA is going to be reporting their earnings in about 3 days. This Wednesday, May 20th, is going to be a big doozy. When NVIDIA gives their speech about how much AI infrastructure is being built, well, CoreWeave is going to move harder than almost any stock in the market, so things that could move the stock in the coming weeks. NVIDIA earnings May 20th, new customer announcements. One almost happens every single quarter, and this tends to really cause rally-ralitos. Next generation NVIDIA chips being deployed, AI CapEx announcements from big tech companies, which people will assume downstream flows into Core, and then any major news about the AI build-out, the honest risk. Of course, a lot of their revenue comes from just a few customers. If Microsoft, Meta, or OpenAI pulls back, or there are some fears about that, well, that is going to hurt the company. They have also borrowed a lot of money to build out all of these data centers. When the AI boom gets into a cycle downward, well, CoreWeave is going to get hit hard.